I went back and I looked at CAPE. If you think about CAPE, it does a really good job of projecting the future. And everyone just quotes the current CAPE. We have a CAPE of 40. It's very expensive. Within that CAPE is NVIDIA. And NVIDIA is 8% of the market. If you look at NVIDIA's CAPE, it's roughly like 283. And if I told you someone had a CAPE of 283, you'd say that's the most expensive stock in the world. But it's because their earnings from 10, 9, 8, 7, 6, 5, 4 years ago were minimal. They've ramped up in the last few years. So its PE is in the 40s, 50s, much more reasonable. So if you just take out NVIDIA out of CAPE, it drops CAPE by over 3. If you drop Mag 7 out of CAPE, it gets it down to 30. It's still high at 30. The stock market in 1929, I think, peaked at 27 or 28. And many other valuation methods that just use kind of trailing 12 months and current are also very high. So I'm not saying just, but the point is that there is some real growth here. And if you look at PEG ratios, those stocks, NVIDIA, Microsoft, Google, they're not the ones with the massive PEG ratios. It's unfortunately a lot of the other 493 stocks, many of which are just boring staples and boring companies.
It's a good point. Everybody was saying earlier this year is like, oh, you got to buy international because they're cheaper than the U.S. stocks, right? U.S. stocks are so expensive. You've got to go buy international stocks. Here's a chart of U.S. forward PE versus trailing PE. This is just 1 year PE. So this is everybody. Currently right now, the U.S. trades at about a 53% premium to the rest of the world. And you go, well, wow, stocks are really expensive here in the U.S. Well, not really from that standpoint, because this is the implied long-term real earnings growth, which is about twice that of the rest of the world. And if you take a look at the OECD estimates for economic growth over the next year, the U.S. will grow at twice the rate as the rest of the world. So again, yeah, you're paying a higher premium for stocks in the U.S. because there is no growth really, or earnings growth in the rest of the world. It's all in the U.S. right now, and it's primarily in these Mag 7 with NVIDIA growing their earnings, Microsoft, Meta. We just saw the earnings report from these companies. They're just absolutely killing it on revenue and earnings growth. That's why valuations trade higher here than the rest of the world, because this is where the earnings growth is. And I'm not saying they're not expensive. I'm just saying you're taking a big risk on this idea where people say, oh, well, buy Europe because it's cheaper than the U.S. You got to be really careful of that because there's no earnings growth over there.
By the way, the dollar's sneaking back up again.
Yeah, back over 100.
Keep an eye on the dollar.
Yep.
Catch me daily on The Real Investment Show. The link is in the description.